Petty cash refers to the expenditure of small items such as parking fees, refreshments, and stationery, hence the term petty. We use it because it is unreasonable and inconvenient to account for all small item expenditures that happen within the business. In operating a petty cash fund, there are 3 steps: establishing, making payments, and replenishing. Suppose you want to establish a petty cash account for all your small item expenditures in your business. You will do as follows. You will debit petty cash to increase it, and credit cash to decrease the cash account by the amount you increase petty cash account by. However, you can't record journal entries whenever you make a payment for the petty cash account. This is only done when you replenish the fund. Before we replenish the fund, we must create what is called a petty cash fund replenishment report. We calculate what we need to replenish the fund, and we calculate the total receipts. In this case, $800 is requested to replenish the fund, and $800 is our receipts. So we need to increase expenses by the amount spent, then decrease the petty cash account by the same amount. Simple, right? So what happens if the receipts don't match the amount you paid for? You can see that we require $900 to replenish the fund, yet our receipts only total $800, meaning $100 has gone missing. Someone stole our money. In this case, we use the cash short over account. Since we lost $100, we need to increase the cash short over account, which is an expense account, and decrease the petty cash account by $900, which is the amount required to replenish the fund. So we've covered what to do if you lose more money than you expected. What happens if you gain money from your petty cash account fund? So we require $750 to replenish this fund. However, we have $50 more than our receipts, $800. In this case, we actually credit the expense account that is cash shortened over by $50. In summary, petty cash account funds are only to be used for minor expenses. Minor expenses should never be recorded in the general journal by itself, only when the petty cash fund is replenished. Cash shortened over is to be used when there is a mismatch in the amount required to replenish the fund and the actual amount spent.